Today I'm going to talk about 3 UK stocks that I bought in the month of February and could continue to buy in the month of February as long as the prices are right, or even potentially go down. That would be even better. So yeah, we're going to take a look at these 3 UK stocks. Now just before I get onto these 3 UK stocks, there's actually 2 stocks I want to mention just really quickly. One is Boohoo. So Boohoo will not be on this list. The reason why I've not bought Boohoo is because I did buy recently, and I'm generally not going to buy the same stock nearly every single day for a couple of weeks. I'm going to spread that investment when I do buy the shares over a longer period of time. And as well as that, I always have quite a few comments about Boohoo on my channel, just because I think we're generally known as the Boohoo channel on YouTube. But I have seen a few negative comments to Boohoo, and oh, you've not talked about Boohoo for a long time. That means you've given up on the company, or you've sold your shares at a loss. That's not true. It's unbelievable the amount of times that I get these sort of comments saying just because I haven't talked about a stock for 2 or 3 weeks doesn't mean I have given up on that stock. The reason why is just because I buy these stocks, I hold them for 2, 3, 4, 5 years, and then I'll see if they've been good investments or not. These are all long-term investments. They're not daily active investments that I want to, this is a big thing about long-term investment. It's just about buying and seeing if hopefully it works out across the longer term, as long as the company keeps on doing the right things. It's not something that I'm going to do general daily updates and see what's going on with the company every single day. That's not long-term investments. I'm a long-term investor. I'm not a daily active trader that keeps up with the companies. Obviously I keep up with the main news articles, which will come out probably once a month or every trading update. But yeah, this is something that I wanted to just say is I've seen a few about that on the Boohoo at the moment. I don't mind, obviously we're well known as a Boohoo channel, and I enjoy talking about Boohoo, but just when I see the negative comments towards that, I'm like, geez, it's 2 weeks of not just talking about it. It doesn't mean I've given up on the company. So yeah, Boohoo won't be on this list, but I might buy some Boohoo sometime soon. But I just, I'm not gonna completely go into one investment every single day of the week and keep buying it and talking about it all the time as well. And it's boring for you guys if I talk about the same stock every single day as well. So we'll see what happens there. The other one is Cakebox. So Cakebox has been on a bit of a drop recently, and I think a few people might think that Cakebox would be on this list. The reason why I've not currently bought Cakebox just yet is because obviously when you have a drop like this, where it goes down 47%, I've got to just reassess that. Okay, I'm not just covering up my eyes, not listening, and go in and buy and dip. I've got to make sure, okay, is this company still going to be very good in long term? Is the growth still going in the right direction? Why has the drop happened? Is there anything that maybe create a bit of a risk with this investment? I've got to look, is there any new risks out there that I've got to weigh up? So because of that drop and it just being so sudden, I've just not had enough time yet to go through Cakebox and weigh up all the long-term growth plan, and if any risks have come into this one that I need to be aware of. So that's the only reason why that one is not on this list today. But once again, Boohoo, Cakebox, don't be too surprised. They could pop up in a week or two and buy some more shares. I still own my shares. I still believe in them, but that's why potentially Boohoo and Cakebox might be mentioned a little bit, but won't be on this list. So yeah, I thought I'd just mention them two right there. But yeah, if you do want to know when I'm buying and selling these companies in real time, make sure to join Patreon. The link is in the description. There's also a Discord with 600 members on there, and there's two exclusive videos a week on there. And I believe it is the highest patrons to subscribe account on YouTube, which is absolutely amazing, especially when you consider how many channels are out there. It's something I'm massively proud of. I think, not to kind of be too big-headed about it, but I do try to put a lot of time in it and try to put a lot of content out there. And the fact is that it's £5 a month. It's not one of these 1,500 a year courses or anything like this. I mean, it's 10-20p a day, which I think is not too bad value for the content that I do try to put on there. But enough of that anyway. We'll get stuck into these 3 UK stocks. So number one, Barrett Developments. I've not bought this for I think nearly 2 years. Nearly 2 years since I bought Barrett Developments. This one, and I believe Taylor Wimpey as well, is probably another good one to look into. Maybe even Redrow. But Barrett Development is my current house builder. So yeah, they are house builders. And I buy this one mainly that it's not a stock that's ever going to go up, 30-40% in a year. It's one of those stocks that will just nicely tick up in the background. The valuation isn't too bad. It's down at 9 times earnings. It's a house builder. It's never going to trade at 30 times earnings, for example. It's always going to be on the cheaper side of the valuation. But I do think at these sort of valuations, it's not too bad, to be fair. And the big thing that I am playing it for and is a bit of a dividend. I've always played this one as a bit of a dividend yield, which you can see here, according to Google, is currently 4.7%. So yeah, I do expect a little bit of a share price appreciation as it continues to grow its profit and revenue. But the big thing is I pick up a good dividend yield, and it just balances out my portfolio quite well, a stock like this. The reason why I bought it at the other day is because, like I said at the start of the video, I'm buying these companies because I've not bought it for 2 years, but it's just having a little bit of a dip at the moment, and I thought, you know what, I'll capitalise on that and I'll buy some shares. So you'll see here from the 4th of January, it had, to the end of January, fallen about 20%-ish. So a company like this falling 20%, I thought, okay, you know, pick up some shares on a dip, bit of a dividend yield, I think it'll do quite well. Now, like I said, it is a house builder. I think it's a very good house builder. It's got a very good reputation. Like, the reviews are quite positive. We know that normally when you buy a new house, you can have quite a few problems, but if you look at the reviews on like Trustpilot, they're quite a lot higher than a lot of the other house builders. And generally, I think Barratt Developments actually build very nice homes. You know, I think I'm not too much of a huge fan of like new builds, but I think these guys actually do try and make a bit of them new builds a bit unique, a bit different from each other, which I think stands out really as well. Well-run company. The recent trading update was pretty strong, and they basically came out and said that everything is kind of in line. We remain in track to deliver both our financial year 2022 and medium targets set out in the financial year 21 results. And also they said that one of the big things that you might be concerned about is that they might have some problems with the supply chain, and they said that pretty much everything's going fine here. So the trading update recently was pretty good. The only really big red flag, like I said, it's not a stock that will ever, you know, bring in crazy results, but a nice little safe play in a portfolio, I guess. The only ever risk that I see to this is that if we have a big, you know, housing market crash or a recession, which it could always happen, you know, don't get me wrong, but I still think they'd be okay and come out the other side. That's the only red flag that I really see towards this one here. But at the moment, everything's still pretty positive for the housing market. You know, I remember, you know, 6 months ago, everyone said it was going to have a cool down, and here we are 6 months later, and it's still as hot as ever. So yeah, that's the only thing, but that's out of my control. You know, people will try and tell you that there's always going to be a stock market crash, a recession, whatever, you know, in 6 months' time, 12 months' time, and it never seems to, you know, plan out, and then somehow they change that to, oh, no, I mean, another 6 months' time, that's when it's going to happen. So you're always going to have people that shout there's going to be a recession or whatever, a crash, and you know, the only times you ever realise that that's actually happening is when you've actually gone through it, basically, or it's happened and you're like, oh, it crashed, you know, it's one of those. So I never kind of listen to anyone from that point of view. Like I said, looking at the company, it is a pretty decent valuation. If you look at the past performance, they've always grown the revenue and profit in the quite a good range. The forecast to still do the same going forward, and I would expect that from their previous how they've done it previously. Expect dividend to be still pretty good going forward. Financial health wise, they're pretty clean on the balance sheet. Only a little bit of debt to equity, but they've still got a fair bit amount of cash, and they've got 1.5 billion in cash there, as you can see. And also on the management point of view, there has been a few little buys here, as you can see, from the chairman of the board in September 2021. And also the CFO bought some shares on the 9th of December as well, which is good going. So I think this is just a nice little stock that will give me a little bit of share price appreciation and also pays a bit of a dividend. So that is number one. Number two, same again, I've not bought this stock for about 2 years, which is JD Sports. And this company's done very well recently. A little bit more of a higher valuation, down at 21 times earnings. I do think that is not, you know, extremely cheap. But it is not too bad. I think that's a big thing. You know, if this stock was ever to say drop down to £1.50 or something, it could happen. You know, it is at the valuation where you could see it go down on a little bit of a dip, especially with the run that it has been on. So I always keep that in mind, but right now I think it's a fair valuation, and once again I picked up this one because it's been on a bit of a dip. You can see here it's currently down 23%. It is currently paying a little bit of a dividend as well, but these guys have just put in a fantastic couple of years. They came up with a trading update, and they give a upgrade on the profit forecast as well, so everything was, you know, beating expectations. So company is absolutely delivering amazing, and that's why it's been on such a good run. The JD online's been popular. The retail stores are coming back in and doing well. They're expanding worldwide, which is great. So it's doing quite well. It just seems to be caught up in this kind of pullback that a lot of stocks are having, whether it's not just small caps, growth stocks, it's UK stocks. There's, everything's having a bit of a pullback at the moment. And I think it tied in, only on January the 12th, this good news that came out that they're upgrading the forecast. And then since then, it's not done anything for the share price. It's just seen it actually go lower. I think maybe one of the big things is that one of the insiders then decided to offload some shares, and it was a bit like, okay, why is the insider kind of offloading shares when you've just got this really good news going out? But that's insiders, they can sell for many reasons. It's not something I worry about too much, but maybe that just kind of tied in, especially with it being on a good run. So we've been on a bit of a dip. I thought I'll pick a few more shares up on this one. If we look into the company here, like I said, the valuation's not too bad. Growth wise, it's still going to put in decent amounts of earnings growth. Revenue is still going to move in the right direction, which is great. Financial health wise, it's pretty strong on its balance sheet as well. Dividend, it has started to bring in a bit of a dividend, and we'll see what happens there. But I think this is just a steady little hold for the portfolio. I'm picking some up on a dip. And the last one I bought was Illegal in General. So same again, this is very much like a Barrett Developments. It's a low valuation, but it always will be because of the industry that it's in. They have so many different financial services here, asset management, pensions, mortgages. They're well covered. It's a company that everyone kind of just nods away and goes, yeah, it's a good dividend stock for a portfolio. Just one of those, just steady way company. It's not going to be a stock that brings in crazy returns in a year. It'll just tick up nicely as the years go on and pay a bit of a dividend. According to Google right now, it's paying a 6.2% dividend yield. And if we have a look at the valuation, it seems pretty cheap. I don't think this will ever go up to it's currently 7 times earnings. It won't ever be a company that goes up to 20 times earnings, but I do think it is probably slightly undervalued at these sort of points. So we'll see what happens there. Growth wise, it's revenue is always in and out, jumping wise, but earnings are always pretty steady with this company. Financial health wise, same again because of the industry, and the debt to equity is a little bit awkward with this one, but they haven't got too much debt to the cash balance that's on there, which is really good. Dividend yield have a history of paying up that dividend quite a bit and hiking it up, which is great. And when you look at the payout rate, it's not burning them at all. It's a pretty healthy payout rate that they have under control here. And one thing that I was really impressed by is the amount of little minute insider buying that's going on here. Just check this out. Look at all this little minute insider buying that's going on. There's a fair bit going on there, which is quite interesting. But same again, just a nice little healthy stock that brings in a bit of share price appreciation. Got a bit of dividend yield in there. Never a stock, all three of these stocks are never going to be main positions in my UK portfolio, but just, nice little healthy positions that I think will do the thing over the next few years. And I've not bought in all three of these companies for about 2 years now, so I thought these little dips were a good little opportunity to buy some shares in them. So that's what I did. So hope you enjoyed that anyway, guys. If you could hit the like button, if you're new, subscribe, and you found this video helpful, and I'll see you in a bit.